to know your numbers. Now that we've discussed both revenue and expenses, topic number 3 will cover gaining a basic understanding of the profit and loss statement. The P&L, as it's often called, provides a lot of information about a business's operating results. Set up properly, it will provide both specifics and totals for revenues, expenses, and profit over a specific period of time, all in one report. It's a tool to be used and referred to often so you can make sound, more educated business decisions. Hello again, Carol, and it can't be emphasized to small businesses enough just how important it is to keep their bookkeeping accurate and up to date so that they can use this tool effectively, but they should know about the basics to use it effectively.
You're right, Ross. The foundation of your books is the most, it's the most important thing that you can do. Well, welcome to the introduction of the first financial statement, the profit and loss. You have already been introduced to some aspects of it, but we need to review it as a whole. So if you look at the slide, we have a profit and loss statement. We have 5 components to it: income, cost of goods sold, gross profit, expenses, and the all-important net income. Here are a few questions to ask yourself. Is your profit and loss organized in the same manner? Does it look like this? Print it out and take a look at it. Get comfortable with reading this information. One thing I wanted to jump into is just to describe some of the things that I see out in the field. Common issues that when I look at a profit and loss, sometimes I'll see fixed expenses being included in the cost of goods sold area. Sometimes I'll see within the cost of goods sold area, there's no breakdown of the direct labor. On our example here, we have payroll, and I'm assuming that is for direct labor, but sometimes it's missing. And I really would like to have that number in there so I can tell how profitable we are. Sometimes the cost of goods sold section is blank. Please don't do that. And sometimes there are items that should be on the balance sheet that are included here. And this one is really the most difficult thing that I see. Sometimes I'll see an owner's draw here. Owner's draw does not belong in the profit and loss. It's a shame because you want to take money out of the company. Another thing I'll see is principal portions of loan payments here. Only the interest expense is included underneath the expense area. And sometimes I'll see credit card payments put on the profit and loss. And again, that's something that goes, only the interest expense part of it goes on here. So do me a favor, take your time and print it out and take a look at it. Remember, the profit and loss is set up this way on purpose. And so if it's set up differently, and I guess what I should really say is that I've seen profit and losses put differently, printed out differently, or established differently by a small business owner. And there's a reason why they do that. The reason why they do that is they're really trying to determine the profitability of different sections of their company. So if we take a look at the next slide, we can see that somebody was following our example of revenue methods and broke out in the income section, specialty. This is for a coffee shop. They broke out specialty coffee, smoothie, and baked goods. And I really like the example here. The reason being is that I can see that 50% of our total income comes from specialty coffee, 17% comes from the smoothies, and 33% comes from baked goods. This is a really good representation of what is going on for revenues. So if I encourage you to take a look at this and see if you could also mirror this in your own manner. Now, we're going to have Ross go into the cost of goods sold section deep dive, and take it away, Ross.
Thanks, Carol. So here's a closer look at the cost of goods sold section of the Arlington Coffee Shop P&L statement. All of the individual direct costs of producing and selling the shop's goods have been captured correctly here in this particular example. Now, if we subtract the cost of goods total from the total income figure, we arrive at a number, $22,118, and that is called gross profit. Gross profit is the amount of profit realized directly from the sale of the shop's goods. This is an important metric as These direct expenses are ones that the business owner has the most control over, and success or failure with this one can directly make the difference between your business succeeding, being mediocre, or outright failing. Gross profit is also what is available to pay the business's operating expense, and if there's anything left over, provide the owner with some net profit. So the next section is we're going to take a look at gross profit margin. Okay. You'll see that the gross profit figure here of $22,118 is also being labeled and expressed in an additional way, gross profit margin, or as it's often called, simply gross margin. This number is arrived at simply by dividing your gross profit by your total income line. Expressing this total as a percentage allows you to easily compare your results for a specific period with another relevant period to your business. For example, you might compare the results for the same exact period last year to see how you were doing year over year. But another reason you would look at it this way allows you to easily compare your current results to how other businesses in your industry are doing. Now, we're going to go further into detail about industry averages and metrics in the next section. Okay. Carol will also now discuss operating expenses and basic review and analysis of the P&L statement.
Okay, Ross. So here is my biggest concern is how to analyze your company. And one of the things that you and I both talk about, and it happens to every single client that we meet, they are fearful of what the components of the profit and loss are, but we taught them about it. Okay. And we want you as a small business owner to understand, to be comfortable with this information. It is your company. And now that you know the definitions and the ways to possibly break it down, we want to help you to become more profitable. And by overcoming your fear of looking at the profit and loss and giving it a try, you will be more successful. So we really encourage you to do that. And we're also going to share how we analyze companies, and we can break it down into a systematic way that you feel comfortable about, and you can do this on your own. Okay. But of course, we'd be happy to help you out. So how do you analyze your company? Well, first step is print the profit and loss and make any corrections that are necessary. Be careful here, of course, because we have to be IRS compliant. But if we could track revenue sources by, in the revenue section, that would be awesome. And please split out the cost of goods sold, and so that you can come up with that correct gross margin that Ross talks about, and then the fixed expenses, and then finally your net profit. So after your corrections are made, then what do? Well, run a profit and loss report for the time period of year to date. Look at it. How did you do? Familiarize yourself with the components of the profit and loss again, and get comfortable with it again, and make a note of what you find. Don't beat yourself up here. Just make a note of how you did. All right, next step after that, run a profit and loss again, but this time customize it as a percentage of revenue. Look to see what revenue streams make up the highest percentage of your income. What makes up the lowest? Just ask yourself. If it's not there, well, maybe you need to find it. Use these same questions for the cost of goods sold section. What makes up the highest percentage? What makes up the lowest? Look to see what the gross margin is, percentage that Ross talked about, because you will use this percentage as a benchmark for evaluating your company during different periods. Remember, you can't use actuals when it comes to gross margin because it fluctuates with sales. Then remember, this is as a percentage. Look to the expense section. What is the makeup of your expenses? What expense has the highest percentage? What has the lowest? Just a hint here. If you needed to reduce expenses and you identify the top 3 largest expense items by percentage, you would get the biggest bang for your buck if you focused here. Focusing on small percentages won't make big changes quickly. And remember, usually when you have to make a change, it's because you're under a lot of stress and it has to be done quickly. If I can make one comment here, when I do this with clients, meaning when I run the profit and loss as a percentage of revenue, this is where I get that aha moment. Why? Because every business owner that I've ever met knows intuitively how their company is performing. And they usually have done it by just looking at their checkbook. But once they see it on paper, they get confirmation and insight into something that they had a hunch about. It is one of the best times that I have with a business owner, and it gives them confidence and evidence about their performance of their company. It's awesome. It's like it's just relieving information for them. Then at that point, that's the point where we start to get down to work, all right? Because then at that point, we can start to discuss strategies to make the company more profitable. Then we meet again and run the profit and loss to get feedback on how their decisions resulted, either good or bad. It's like they're finally getting income for the information for the first time, and hopefully income. So please, I encourage you to do the same, even if they're wrong, even if they don't fit exactly how Ross and I have suggested how you set it up. It doesn't matter. Just looking at it will give you relief. All right. So now that you're comfortable looking at your company, what are your trends? How have you been performing? All right. So on the next page, we have an analysis of past performance and to look at some trends. This one, we ran a profit and loss by month. All right. When you do a profit and loss by month, I use the same analysis questions for each time and for each component. First, what happened to revenue each month? Just look at your total income. Did it increase, decrease, stay the same? Compare it to the month before, the month ahead, maybe even the prior year. Same question. What happened to my cost of goods sold cost of goods sold? Did it increase, decrease, stay the same? What happened to my gross profit margin? Remember, that's a third component. Did it increase, decrease, or stay the same? What happened to my expenses? What happened to my net profit? Here's some expectations that I have going into an analysis, right? I'm just going to share it with you. If you're seasonal, you're going to have variations in your revenues, cost of goods sold, and net profit, but their expenses might stay the same. For example, let's say you're a retailer. You purchase all your items for holiday sales in June and July, and then you sell it in the fourth quarter of the year. What would a profit and loss look like if it is broken down by month? All right, first, I would expect to see small revenues from January to August, small net profits, and perhaps even months of loss due to the purchase of holiday items, your products, because you're getting set up for the season, but also because your fixed expenses stay the same. Then in the last quarter of the year, I would see huge revenues and huge net profits. So the question that I ask people, and that might get confusing if you looked at a month-to-month comparison, they might say, oh my God, I was not profitable in August or July, and oh my goodness, things are bad. But if I look at it over the whole entire year as a whole, you were profitable. And guess what? Having those fluctuations in net profit is normal. It happens in seasonal companies. Understanding that is absolutely critical. Some companies are totally stable and they just continue on. Their revenues don't fluctuate. Their cost of goods sold don't fluctuate in great amounts. That's fine. It's a different analysis. But how will you know unless you understand your trends? The moral of the story is that when you analyze trends within your company, you also have to look at the overall performance of the company. And in that situation, I would say, do the same exercise, run a profit and loss year-to-year comparison and see how you're doing. Finally, and this topic is for a different seminar, but the next step of analysis would be to run a profit and loss by customer, profit and loss by product, profit and loss by service line, or by revenue stream. Again, you can't go wrong here. The analysis process is the same. The reason is it is not delivered here is that it can be difficult to do to set this up within the accounting system. And it may be something that you want to break out into a spreadsheet to figure out, but the components do not change. Again, we have the 5 different components that we're looking at, and we're going to analyze it in the same way, looking for trends and then looking to see how our decisions affect our profitability. So that's the bottom line for past analysis of past performance and trends. And I'll let you comment on that, Ross. What do you think?
Well, I think there's some great information there. And first and foremost, I think one of the key takeaways that we can have here, from your part of this conversation is don't be afraid of this. I mean, this is information that can be mastered with a little bit of work. And as you pointed out, there's just a few metrics and a few line items that you can look at that'll help you accomplish a lot in terms of getting your arms around how your business is doing. So I agree. I mean, that's fantastic. And really a stickler on the gross profit margin piece of this. A wise person once told me that business is all gross profit margins. And that's really what you have to focus on, because if your margins are getting better and improving, at some point in time, it's probably very likely that you're going to become profitable, if not very profitable. So it's really important to really understand your cost of goods sold and gross profit margins. You have any key takeaways that you'd like our folks to get from this?
Yeah, I think that one thing I'm going to reiterate is that try to put aside your fear, and it doesn't have to be perfect. You can look at it and just get comfortable with it. I want to reemphasize that, you've been managing the company as a small business owner through your checkbook. And in order to take it to the next level and to really truly understand your profitability, we've got to get you out of the checkbook and into these financial statements. This is the first one. You can do it, and the method of analysis doesn't change. So it's okay to repeat and repeat. And after a while, you will get comfortable with it. I guarantee it.
So true, so true. Okay, coming up next, we're going to focus on the next financial statement, the balance sheet, and that's in our next session. And we hope you'll join us.